Hey there, everybody. This is Bob with Trade Genius. My good friend Phil with me, another silent partner. Get better soon, Phil. But he's manning the keyboard for me. So what we'll talk about today is: are we going into the bull rush to the end, or is it a trap? And there's interesting data on both sides. Stay tuned. We'll talk about it.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening. Okay, Phil, about 2 or 3 days ago, I was showing everybody just a massive amount of zero DTE in the option world. And today I want to show what the legacy analysts are saying is going to happen. But I don't know, and I think you agree with me, is that I don't know which one is going to cause the market to either crash up or crash down. Will the options derivative markets blow up, or will just the strength of the amount of money coming into the system is it going to cause the market to do a crash up, blow up? And the first chart I want to show here is the margin chart. So if you look at the margin chart, and this is interesting because people are arguing that there's not enough sample data on there. I just want to point stuff out to you, what people watch, because as we learned, that's all that matters. Why is the 9 EMA important? Because somebody declared it to be important. The thing you always argue with me all the time on, Bob, you might be right, but until the institutions say you're right, you're not right. And so what we have here is that usage of margin has fallen significantly. And usually when it gets to second standard deviations, when you usually get a market crash, that means people are too far over their skis, Phil. And but what I find interesting here is we're in an environment now where I have some margin on some things right now, but I have to pay 10% on my margin. That's pretty steep. And I think that's probably what's holding it back. So I don't give as much credence to that. And also the 1987 market crash was a derivatives related crash. And if you notice on that chart there was nowhere near over its skis. So I call this inconclusive, but people are pounding the table on, hey, we have room to run until speculation gets to be more intense. Second thing I want to show you is what Bank of America says. And of all the analysts out there, I like what Bank of America, they're usually more right than wrong. And what they're saying is that there is a rush into the stock market right now. Everybody's FOMOing right now. And here's the wildest thing, Phil. They're rushing into tech. At the same time, the insiders are selling out of tech like crazy. And I think tech has topped. It's just way, way over its skis. You just have to look at Apple's chart and the Apple ExxonMobil chart that I showed earlier this week. But they point out what I think is really the elephant in the room is the stagflation risk. And, we only have a few instances where we had stagflation in this country, and it's not been kind to stocks. So you get a rotation out of the primary trend, in this case it was tech, into commodities. And usually when you get into a commodity bull, the commodity bull usually turns into a crash of the stock market. So I'm thinking 2008, I'm thinking 1973, 74. Those things were crack up booms to crack up crashes. And I think this is probably the more likely scenario. We just don't know the trigger. And this last chart I want to show you, Phil, is the stocks above the 200-day moving average. When you get 80% or greater, you get another push higher in the market. I think this can be a trick of math here because the Mag 7 or the Mag 9, if you count, SMCI and such in there, is that they've been so far prevalent in terms of the movement of the price that we could get a rebalancing of stocks over the 200-day moving average and have the indexes really go nowhere. And if something happens to these tech stocks, they can fall. So this is the narrative that's being driven by the mainstream analysts. They're saying, don't worry, be happy. But I think the elephant in the room is it's inflation, and I think the trigger is the derivatives. So I thought I'd just share with you guys, I'm personally surprised with the persistence, I should say, of the stock market. Although, we've been profiting from it because my bias has always been to the commodity side and energy. And now we're seeing with a big move we had in copper yesterday. We put people in FCX yesterday. It's breaking out. I showed people Southern Copper. That should be what FCX is going to look like. And I think that's where the money's going to be made. So I like to say I want to be wrong, but make money in commodities, because I think when I'm right, I don't think there's going to be very few safe havens, Phil. I think it's just going to be TLT and cash. And one thing too I should add is some of our subscribers asked, and maybe we should do this next week, is that there's a wheel out there called the Condrative wheel to show kind of where we are. It's like a clock, and I'll pull that thing up, and maybe when I'm back in town, maybe we'll do it next Wednesday, next Thursday. Let's walk people through the wheel, because I think what's going to happen here is that we're coming out of summer into a very short fall before we get into a winter. With that, Phil, that's kind of what I want to share today. You guys have a great weekend. Check us out. I think we can help you make some really good money in the market right now. Our picks have been hitting all cylinders, and we want you to be able to take advantage of it, because we're looking at data, but we're also looking at our algorithms, and micro beats macro every day of the week, and we think we got micro down pretty good. Thanks, Phil. Catch you guys later.
Trade Genius.